Great. Well, I see that we've got lots of folks on the line. Thank you all so much again for joining our deep dive webinar on strengthening impact measurement and management approaches in an increasingly sophisticated and mature landscape. My name is Sophia Senderji, and I sit on the research team at the Global Impact Investing Network. And I'm just going to pause for a brief second and make sure that the sound is working for all of our audience members. Sounds like it is, which is fantastic. So before we get started, just a couple of quick housekeeping announcements. All participants are already muted, but we'd love to have you engage. And so I encourage you to use the chat function to submit any questions that you have throughout the webinar. And we'll have a dedicated Q&A session at the end to answer some of those questions. This webinar is being recorded, and we'll be sure to circulate the recording and also the slides afterwards. And then lastly, I'll just mention, as you can see, we are navigating transitioning to a virtual world. And so thank you in advance for bearing with any potential tech disruptions. And please do feel free to flag those in the chat function as well. And so we're very grateful to have so many of you on the line, especially since we are living in an unprecedented time. And as the COVID-19 situation unfolds around us, I know that each person on this call has been faced with tremendous challenges over the past several weeks. And I also know that we all individually and collectively recognize the important role that impact management especially can play now. And so we very much appreciate all that you do, and certainly appreciate you joining us on the line today. And with that, I'll run through our agenda. We'll be starting off today's call with some opening remarks from Kelly McCarthy, the GIIN's Director of Impact Measurement and Management in IRIS+, who will also address this context in her remarks. I'll then be sharing some research from our most recent report published in January, and we'll focus on 3 key findings that really indicate a historic shift in the industry as impact investors deepen and strengthen their approaches to impact measurement and management, or IMM. We will then hear from our 3 guest speakers, and a big thank you in advance. We're so glad and grateful that they're here to share their own experiences as practitioners. And we have on the line Jessica Rios from Vox Capital, Casey Klein from Shared Interest, and Anjani Bansal from the Bill and Melinda Gates Foundation. And then finally, at the end, we will have some time for Q&A. And so please do keep those questions coming through the chat function on the right-hand side of your screen. And on that note, I will hand it off to Kelly for some opening remarks.
Thanks, Sophia. Welcome, everyone, and thank you for joining us today. We're here to talk about strengthening impact measurement and management approaches and the results of the recent Impact Measurement and Management Survey. But as Sophia mentioned, first, I must address the crisis going on right now in the world. We find ourselves, each and every one of us, doing our collective work in unprecedented and uncertain times. This community and the work you do is more important now than ever before as we face this coronavirus pandemic together. The GIIN's role has always been to bring this community together and to address tough problems and advance important ideas. And in this moment, the role of the GIIN is to help unify efforts across the global impact investing community to quickly and effectively respond to the coronavirus pandemic. I want to touch on 3 main categories of action that you can expect from us. We are gathering and sharing information and data to help impact investors better understand the financing needs of this crisis and to decide their own best response. We are connecting impact investors to exchange knowledge and strategies so that they can deploy capital most effectively in this changing environment. And we are accelerating investment by building collaboration and cooperation of our strong convening power. This coordinating role leverages the GIIN's worldwide network and our expertise at rallying and engaging the investment community. I'm happy to connect anyone on the line with someone here at the GIIN if you'd like to learn more about the GIIN's crisis response and get involved. So with that, I'm going to pivot to the topic at hand. Impact measurement and management is essential. It is essential to the identity and practice of impact investing. It's a core characteristic of being an impact investor. It's the only way we can assess whether our capital is meeting our impact expectations and how effective those investments are at addressing our global goals. Impact measurement and management practices have grown increasingly sophisticated as the impact investing landscape has matured. We're seeing a shift from making the case for impact measurement and management practices to integrating those practices within the investment process as part of routine daily business operations. For the past decade, the GIIN has been a vocal advocate for the importance of incorporating impact considerations into investment management. The survey findings we will discuss today show significant progress to that end. I'm proud of both the GIIN's work over the past decade and the work of all of you as impact investors in advancing not only your own organizational practices, but also the broader field. On that note, I'm very excited that today we have with us 3 diverse practitioners who will share how they are deepening their own impact measurement and management practices. And as I mentioned at the top of my points, the GIIN's role is to bring this community together. So we are very much hope that you will actively engage in today's discussion. As Sophia mentioned, there's a lot of ways to share your comments, your questions, and your ideas. So please do so. I'll now turn it back to Sophia to take us through the survey findings. Thanks, Sophia.
Great. Well, thank you so much, Kelly, for those really thoughtful words. And with that, I'm very excited to share with you all some of our key research findings from our most recent report, the 2nd edition of the GIIN's State of Impact Measurement and Management Practice Report. And this research really provides an overview of impact measurement and management, or IMM, in the impact investing industry. And really what we're seeing, as Kelly mentioned, is a historic shift as investors deepen their IMM approach, strengthen its integration into investment processes, and increasingly demand insight into impact performance. So this year's report is based on the perspectives of 278 impact investors globally. And a big thank you to those of you on the line who participated in this research. In this report, we cover a number of topics, including motivations for measuring and managing impact, what impact investors are measuring and how they're measuring it, perspectives on the market, including industry progress and challenges, the capacity and cost associated with IMM, and then the accountability that comes along with it. And then we also include in the report some 2-year trends analysis. And so looking at how the market has changed over the past 2 years based on a subsample of respondents. And so I encourage you to take a look at the report, which can be found on the GIIN's research page on our website. But today I'll focus on 3 key findings. And the first finding is that investors measure impact for both impact reasons and also for business reasons, suggesting an increased sophistication in investor motivations for conducting IMM. And so we see here a number of different reasons or motivations. And firstly, there's a strong focus on the business value derived from measuring and managing impact. It enables investors to capture business value from impact data, to communicate impact, and to address client demand for this information. Then there's also the impact value, of course, and I'll draw your attention specifically to the 3rd reason here, where 72% of respondents cited improving impact performance as a very important reason for measuring and managing their impact. And just reflecting on Kelly's words and thinking about our global pandemic today and what that means for investors, using impact data to identify where the need is, shape products, and implement solutions that reflect those needs is really quite crucial. And that's what will enable investors to drive towards strong impact performance, especially in today's context. And then thirdly, as we see here, impact investors tend to measure and manage impact for compliance reasons. And so thinking about government regulations and reporting requirements to key stakeholders. So when thinking about that second piece, the impact component, which of course is central to the work that we do, we see that investors tend to target a range of impact objectives both social and environmental. And so as you can see here in this chart, nearly 2/3 of investors focus on environmental impact, either as their sole objective or alongside social objectives. And then within that segment, what the data tells us is that the most commonly targeted ecoregion is terrestrial, with over 9 in 10 investors targeting terrestrial regions. Impact investors also tend to target a variety of stakeholder groups. But what we see is that the majority of investors tend to target financially vulnerable groups. And so this includes individuals at a certain socioeconomic level and those who are unemployed, as well as women and girls. And I'll note that these groups of stakeholders tend to be disproportionately affected by economic shocks and instability, including a health crisis like this one. And so important to really think about and reflect on the level of vulnerability right now amongst the stakeholders that impact investors most commonly target. And really, it's a signal that this type of impact data around stakeholders is especially critical in the situation that we're in today. Our second key finding from the report suggests that there has been a historic shift. And as the market becomes increasingly sophisticated and mature, what we see is that investors have shifted from building consensus and seeking buy-in around impact measurement and management to really strengthening its integration in the investment process. So investors are considering impact data at each stage of the investment process, and most commonly during due diligence and screening, as we see here in this chart. And I'll emphasize that 3/4 of impact investors do give impact data significant consideration when spotlighting social and environmental needs that must be filled. And in particular, in a time of crisis, this type of impact data can also be critical in terms of identifying a pressing issue and then really driving investment to where it's needed most. So using this type of impact data to make decisions is more important now than ever. And so we see the role of impact data continuing to grow and become more sophisticated as the market matures. And that sophistication is also evident when thinking about how organizations dedicate staff and other resources to operationalize IMM. And so investors tend to integrate IMM into the responsibilities of the investment team. And often what we see in the data is this is because investors simply feel it's more effective to do so. But then we also do see that about half of impact investors do have staff dedicated exclusively to measuring and managing impact. And I'll also note here that we see IMM is actually a shared responsibility among senior leadership at nearly 40% of organizations, which is really a clear indication of industry buy-in and suggests a growing consensus around the importance of impact measurement and management. And in fact, when we ask investors about areas of progress in our research over the past 3 years, what they tell us is that it's exactly that. And so investors and donors better understand IMM. And then there's also an availability of resources to facilitate that impact measuring and managing practice. And so it's really quite evident that investors have figured out the reporting and are now moving in the direction of really making sense of that information and using it to create value. And because the industry has matured and reached this point, what we're hearing from investors, including many of you on the line, is that there's really a new set of challenges and opportunities that lay ahead. And these really center around a clear demand for impact performance insights. And so our third and final key finding is that as the market grows and matures, impact investors increasingly demand insight into impact performance. We found that the most critical challenge investors face internal to their organizations is around using and collecting data. And so as we see here in the chart, the top challenge is an inability for investors to compare their own impact results with market performance and with their peers. And then the other side of this really lies in designing and implementing an IMM strategy, which we see is also a challenge, though perhaps to a lesser extent. And so really what this reinforces is that the industry's focus has shifted from just understanding impact measurement and management to thinking about how to analyze, interpret, and utilize impact results. So then the question becomes, how do we really address these challenges? The most important resource cited by investors to advance the practice of IMM is impact benchmarks. As you can see here, over half of all respondents cited impact benchmarks as a very important resource. And then as we see, this is closely followed by tools to strengthen impact screening and pooled impact data. But what we also see is that investors are keen on educational materials. So things like case studies, certifications, webinars, and workshops. And so here at the GIIN, we see this data and we hear from investors that there really is a clear demand for impact performance insights. And so the GIIN is very keen and excited to be addressing this demand. And first, of course, we are continuing to build on our decade plus of experience in impact metrics and guidance, tools and resources. And that, of course, is based largely on IRIS+. As you all probably know, IRIS+ is the generally accepted system to measure, manage, and optimize impact. And so it enables investors to measure their impact results relative to their own objectives and expectations using a standardized approach. And then secondly, the GIIN is now also focusing on analytics to really interpret impact results. And we released our first 2 installments of our impact performance studies last October, and we're very excited to be collaborating with our network to build an approach for comparing investments on the basis of impact, and ultimately driving toward impact benchmarks and ratings and increased transparency in the market. So that's just a little preview of what the GIIN has been working on in response to what we hear from you. But at this point, I'm really thrilled to turn to perhaps the most exciting part of this webinar, to our practitioners on the line who have very graciously agreed to share their own perspectives and some examples of how they are strengthening and deepening their approaches and also tackling some challenges. And so we're so pleased to have Jessica from Box Capital, Casey from Shared Interest, and Anjani from the Gates Foundation. And with that, we'll start off with Jessica Rios, who is a partner at Box Capital and heads their impact strategy. Jessica, over to you.
Thank you, Sophia. Hi, everybody. Thank you for having me. I hope you all are safe and healthy during this difficult time. It's an honor to represent Box in Brazil here. So I will spend the next minutes showing how impact is managed in our operations. I can say this is a relevant role that since the beginning of Box, we include an impact component in our compensation fee. I would like to start talking about our approach. Our approach is made in 3 steps, and in order to present them, I will use CellCoin as an example. Next slide, please. CellCoin is a fintech that turns smartphones into utility payments terminals. Paying bills in Brazil is painful. 5 banks have 90% of the brands. Only these banks can provide utility payments, and the population who live far away from banks depends on banks to pay their bills. CellCoin offers an opportunity for micro-entrepreneurs to become payment terminals and therefore pays them for each transaction. These entrepreneurs are then called CellCoin agents. The population who live closer to these agents start paying their bills locally instead of having to move only to pay bills. Next slide, please. In the first step, we understand if the problem is really relevant for the population. Our intent here is to seek for solutions that solve major problems in Brazil aligned with the global SDG agenda. At this point, we research sector data, made public surveys, and talked to specialists. In Cellpoint's case, we understood what kind of service was rendered by banks and in which social economic context the population required help. We got to the conclusion that it was a service with very little offer, mainly in the northeast of Brazil. The second step focused on the solution validation. At this point, we aim to understand in a deeper level more about the solution capacity to address the problem, potential positive and negative effects for users, and the intentions underlying the team. At this point, we start with the theory of change built together with the entrepreneur team. We also interview potential users so that we can have a more complete view of the impact. After that, we apply 5 dimensions of IMM. Whenever possible, we use reference in IRIS+. At that point, we define solution effects divided by target users, income increase for micro-entrepreneurs, and also cost reduction for the population. In the third step, we focus on the solution efficiency follow-up. Here, we define metrics that translate impact performance and that are useful for business management. Our indicators definition is the outcome of a joint effort between entrepreneurs and the stage of business growth. Next slide, please. In order to do that, we develop and analyze each company in a matrix that see the capacity of the impact versus the maturity of the business, which we called impactometer. In the investment evaluation phase, we construct the theory of change for Cellpoint and map its impact risks. At this very stage, we define indicators focused on users' profile and how much geography impact we can achieve. As it develops, we define indicators that would show us the effect of the solution in users' lives. Such data was collected by people in products and the commercial staff. Now that Cellpoint is in the scale-up stage, we have made a partnership with a university called INSPIR. INSPIR has been developing robust analysis in order to validate the business contribution and experimenting with control groups and treatment. Each company in our portfolio is analyzed through this matrix and receives a color according to the impactometer matrix. In terms of our challenge, our main challenge is to integrate impact in decision-making. In our experience, we see 3 main remaining gaps. The first one is find the most accurate customized indicators so that they can be useful for investees, but we also should combine with indicators that can be standardized so that they can be tangible for investors. The second thing is having a very lean process that make it easier for the company as possible. The third thing for us is having a benchmark and defining an impact goal. As impact investors, we believe our compensation fee, besides having a financial component, also must consider impact through some kind of rating that can be compared to a benchmark. We use it years, but it has been discontinued, which opens up a gap and a challenge for us to create such rating. Benchmarks are usually generic, so they end up losing relevance. So that they can in fact be useful for business benchmarking, they must be by sector or even impact categories, as IRIS+ has showed for us. We would like to have impact as a key component as financial benchmark already is. Impact investing is ever important in the world than before with this pandemic. Well, I guess this is all I have to say about us. Now I will turn back to Sophia. Thank you so much.
Great. Thank you so much for that, Jessica. That was really insightful for all of us to hear. And just a quick reminder for folks on the line to please send in any questions you have for our speakers using the chat function on your screen. And with that, I will pass it over to Casey Klein, who is the Managing Director at Shared Interest. Casey?
Thank you, Sophia. Thank you, everyone on the line. Just quickly on shared interest, what we do, we provide loan guarantees to Southern African agricultural enterprises, SMEs, MFIs, and low-cost housing organizations. Our objective is to catalyze local commercial banks to disperse loans to underserved enterprises and communities. And we're currently working in South Africa, Mozambique, Eswatini, Malawi, and Zambia. Just very briefly on our structure, we have a pool of investor capital that is custodied at Citibank here in New York. And it's Citibank that issues a standby letter of credit to local Southern African lenders who then disperse a loan to small businesses that we're supporting. We work with partners on the ground in the countries where we're active. So in South Africa, we've been working with a partner for 20 plus years. In Malawi and Zambia, we have new partner relationships with our work there. Apologies, Sophia, you can skip to the second slide. So it's with our partners that we work, that they gather the impact data from our investees. Though I should say, with kind of our investees having greater connectivity in recent years, we've been actually able to gather the data ourselves. And so that's basically how we're set up. And what I thought I would talk about a couple of the challenges that we face and how we go about addressing those. And if you could skip to the third slide, Sophia, I'd appreciate it. Thank you. So data gathering, basically obtaining meaningful data in a timely fashion. I think because we've always been relatively sector agnostic, we have tended to have a pretty wide variety of data types of investees, different types rather. And so, you know, we've historically looked for similar, if not same type of impact information from each of the investees over the years, but it's become pretty clear that kind of one size does not fit all. So in recent years, I think we've become more targeted, the type of impact we're seeking based on the type of business and specific impact of each investee. So specifically what we've been doing is, I think, a better job now of working with the investees to understand the type of information that not only we believe, but they believe is not only meaningful, but also obtainable. Secondly, we create specific data gathering tools for the investee to use to collect and submit data. And lastly, we make the data requirements and these impact data tools make it part of the tripartite agreement or the contract that we sign with the lender and the investee. So I think some of those steps have allowed us to do a better job of gathering what I would say is more meaningful impact data on a more consistent basis in the last couple of years. A second challenge that I think probably rings familiar for a lot of folks on the line is the comparability of positions. So basically, how do we compare the impact of different potential investments in different sectors and different geographies? Say, for example, a transport company in KZN in South Africa, or a legume agribusiness in Lilongwe, Malawi. How do you look at those two and compare the impact of each? And additionally, how do you compare the impact of the overall portfolio at different points in time? So what we've done is develop the impact scoring system. We look at 12 types of impact, from the more simple like job creation to things a little less straightforward like building social capital. Each of the 12 impact types are given a score 1 through 4 and then weighted low, medium, high, or 1 through 3 for the level of relative importance of that impact type. And after adding up the weighted scores, there's an optional multiplier that can be used for outsized or extraordinary impact. This impact scoring system is actually very similar in construct to what we use for our risk scoring system, which also calculates a specific numeric value as well. So we then take that impact score and we take the risk score and we calculate a simple ratio, something we internally call risk-adjusted impact, or RAI. And we do this for each position in our portfolio, and we weight the position RAI to calculate a portfolio risk-adjusted impact. And so for us, the higher the risk-adjusted impact, the better. And this basically allows us to look at potential positions, so during our due diligence process and portfolio construction process, and current positions, and compare them, even though they're in different industries, different sectors, different geographies, etc. It also helps us compare the impact and risk of the portfolio as a whole at different points in time. Now, for us, I think it's been very, very helpful in providing structure to our investment process, but specifically as we look at impact and risk, but it does have its limitations. I would say for number one, there's a subjectivity element with 2 or 3 of the impact types. So depending upon who is doing the actual scoring, it's possible you could see a variance there. And I would say number 2, I think it's helpful for organizations like ourselves that are seeking higher impact, lower risk transactions, and not focusing as much on financial returns. Our investors receive concessionary returns, basically. But for those organizations that focus, say, on kind of the 3 legs of the stool, impact, risk, and financial return, I would guess it wouldn't be as helpful or as useful. But I would say, since we've implemented this impact scoring and the risk-adjusted impact metric, I think we do a better job of comparing potential portfolio positions and portfolio constructions, as well as doing a better job kind of looking at our portfolio as it changes over time. So I will stop there, and I look forward to the questions in the Q&A.
Fantastic. Thank you so much, Casey. And finally, we're so excited to have Anjani Bansal on the line. He is the Deputy Director at the Bill and Melinda Gates Foundation. Anjani, over to you. Hi, Anjani. Do we still have you on the line?
Hey, Sophia, can you hear me?
Yes, we are able to hear you now. Over to you.
Okay, great. Thank you. Well, yeah, first of all, thanks to you and GIIN for organizing this webinar in the middle of this crisis. This is a welcome break from everything else. And thanks, Casey and Jessica, for fantastic presentations. I think, what I will focus on is perhaps less on the process and the specific metrics of impact measurement, but more around what are some of the key learnings that we have drawn over the last few years, having engaged in this space in a few sectors, particularly education, agriculture, financial services, and recently in healthcare. So just a quick background about the foundation. We use a very wide range of financial instruments: debt, equity, grant, first loss guarantees, volume guarantees, and interest buy downs. And the underlying principle is that all these financial instruments are oriented towards achieving a large-scale systemic impact. And as a result, each investment that we make is like a piece of a puzzle that we are putting together. And therefore, our impact measurement framework is also focused both on individual investments and also on the larger systemic change that we seek to drive through our portfolio, which includes all these different types of financial instruments. An example of that would be, say, something like if we invest in an NBFC, while we track metrics like loan approval rates or income of borrowers, we also look at how a particular population segment can become an asset class for multiple financial institutions, and such that the impact goes beyond the particular investment or set of investments that we have made. Next slide, please. So I will just share, sorry, the one before this. Yeah, thank you. So I'll just, talk briefly about the, 4 broad learnings that we have drawn from our investments so far. So one is, the shift from focusing on point solutions or deals to systemic impact and portfolio. And so that's the example that I gave earlier, that instead of looking at each deal in isolation, we try, our goal is to see how it fits into the broader portfolio of investments which is needed in order to solve a particular systemic problem. For example, in case of agriculture, if one of our key objectives is to improve income of small farmers. And if we were to do that, there are several interventions that are needed, which no one investment can solve on its own. And it's rarely the case where improvement in farmer income can be attributed to a single investment or a single product or a service. And therefore, we try to think about what are those systemic constraints that need to be solved, and therefore what is that optimized portfolio of investment that needs to come together. And the impact metrics also need to connect to that broader portfolio of investments and not just an individual deal. And when thinking about those those impact metrics, we have, we are starting to get more sophisticated on contextualizing those metrics and being more aware of the side effects. For example, if you're investing in a financial services company, while the metrics of, say, loan approval rates or income of the target borrowers are good to track, but at the same time, we also want to see whether high repayment rates are also translating to the first claim on household's top line by the lender, in which case it may have an adverse effect on the target population, while the impact metrics or the traditional impact metrics of an investment might be trending in the right direction. And similarly, we also look at how indicators like PAR 90 may not necessarily be the right metric for an agriculture NBFC, which is much more cyclical and has a larger time lags between cash flows. And lastly, I would say is a focus on disaggregated customer data. Next slide, please. And here, what we are realizing is if you look at the chart on the right-hand side, it shows you the breakdown of MSMEs, in this case, India. And it's clear how, when we are, say, investing in a financial services company, it becomes very important for us to disaggregate MSMEs to understand where really is the flow of capital or services happening. And very often we find that it's not the easiest metric to track because bulk of investments go towards S and M, and micro, which is 95, probably even more % of overall MSMEs, pretty much gets left out. Next slide, please. And lastly, along the same lines, when it comes to technology, what we are learning is, as a lot of you may have experienced today, it's pretty hard actually to find a investment or a startup which does not have words like AI, ML, or blockchain in its investment thesis or in its business strategy. But what we are realizing, having made our own share of mistakes, is that it's critical for us to know where those technologies are on the hype cycle, and as a result, design metrics which are commensurate to the maturity of the technology and the time that we see and the potential applications that we can anticipate of that technology, and not get carried away by the hype around it. And last point I would make would be on policy preparedness. where again we have seen that it's necessary to, when designing impact metrics, to keep in mind the impact of policies on a particular business model. As we have seen repeatedly, particularly in emerging markets where policy landscape is more unsettled, that these could have a pretty big impact on business performance and impact. And it's good to be good to take that into account early on in the investment. So I'll stop there. Thank you.
Great, that was fantastic. Thank you so much, Anjani. And at this point, we're happy to open it up to questions. We have received quite a few throughout the duration of this webinar, and I encourage you to send some more in if you do have some. But we've gotten several questions around data collection. And so perhaps we'll start off with that topic, and a couple questions on how you collect data from your portfolio companies. And then specifically, are investees able to analyze their own data, and what are the costs associated with that? So before I turn this question over, I can chime in very quickly from a data standpoint and our research and say that on average, we see that impact investors are spending about 12% of their organizational budget on IMM. So not only data collection, but all IMM activities. But then the data also tells us that within that amount, investors are spending the most on data collection, about a quarter of their IMM specific budget. But this question, I'll turn over to you, Casey. And so how do you collect data from your portfolio companies, and specifically, how do you manage costs associated with that? And are your investees able to analyze their own data that they are collecting?
Great, thanks, Sophia, and thanks for the question. So I'd say there's two ways that we collect data. I mean, historically, we have 20-some years of data. Historically, our partner on the ground would go get kind of a document or sit down with the investee. And so technology obviously has changed that over the years, and kind of what I was alluding to in my presentation was we've been able to design specific tools and liaise directly with the investee. So the short answer is we get data through our partnerships that work with the investee, and then we also get data directly from the investee. You know, I think technology also is a big factor in reducing costs. Clearly, you know, so you don't have to travel you know, long distances to go retrieve data. You can get it via email or Dropbox or whatever's easiest. You know, as far as our investees analyzing the data themselves, it's interesting. I think that's evolving a little bit on our end. As I was saying earlier, we are working more and more with our investees to figure out kind of the type of data that makes sense and how to actually retrieve that data. And so I think kind of an obvious you know, future steps is working on analyzing that together, because I think, you know, that obviously goes a long way in helping them reach their business objectives as well.
That's great. Thanks so much, Casey. We have another question here, a couple of questions actually, around multi-asset impact reporting. And we know that there are lots of folks on the line that do have broader portfolios. And so perhaps, Anjani, you might be able to speak to how you do conduct impact reporting across multiple assets within a portfolio.
Yeah, thanks, Sophia. So for us, it's you know, all different types of investments that we make. They are very much a part of one you know, coherent strategy to the extent you know, it's possible. And as a result, our impact metrics, it's almost the other way around, where the investments that we make emerge out of impact metrics that we want to achieve. And as a result, just from the origination of the portfolio itself, there is a common framework within which each investment is situated. And then when we double click into each investments, there are underlying metrics that we track. But again, the approach is that that metrics of each investment, when it comes to impact, are very much integrated within the business metrics as well, and are to the extent possible not different from, say, the OKRs that each investment will track. So these two approaches, where we are starting from a common framework on which a portfolio is built, and then each investment where metrics, impact metrics, are weaved into the business metrics of a particular investee, is what allows us to eventually bring all different types of assets into one common set of metrics that we can track. But having said that, it is, for us also, it's a work in progress. It's not the easiest thing to do, particularly for a very large portfolio of investments across a very diverse set of sectors. Yeah, that's broadly the approach we take.
That's really helpful to hear. Thanks, Anjani. And certainly is a challenge, as we're hearing from many folks on the line. This next piece sort of zooms out from that metric perspective and revolves more so around benchmarks, which is something, Jessica, I know that you had brought up in your remarks. And so the question here is around really what benchmarks you are using to determine whether potential investees meet your standards in terms of impact. And perhaps you can also comment on that benchmark question more broadly and zoom in on an example. I think that would be very helpful for our audience. Jessica?
Great. So here we have two venture capital funds at Investment Series A, an equity crowdfund platform for seed investment, and one credit fund. So it means that we have different relationship with each of these kind of funds, and we define a framework for each one. What we started to do is aggregate companies by the sector or the impact categories. For example, the financial inclusion companies, we could have some kind of similar metrics. Of course, we have a customized view based on the theory of change of this company, but we also can combine some kind of standardized indicators for each one. We unfortunately don't have one efficient benchmark so far. And we are trying to first identify which kind of metrics can be combined, and we hope we have a kind of benchmark in the market that we can have some kind of impact goal to get. But the first thing that we are doing is to understand what is the capacity of this business to achieve these indicators, such as in data collection process. We still have some kind of challenge to have these information in a way that we can start to compare.
Thanks so much, Jessica. I think you might have gotten cut off a little bit at the end there, but I appreciate your remarks on that benchmarking aspect. And another question that we're getting from several audience members is around the question of transparency in data, which is a very big challenge that we see in the industry, especially on, impact performance, both impact targets and impact results. And so the audience is quite curious to hear about how you as practitioners are working to be more transparent with your impact data, and also, sharing some of those positive findings and also perhaps the negative ones or things that haven't worked out. Any thoughts on that, Casey?
Yeah, sure. Thank you, Sophia. Yeah, I think there's a general need and a demand for increased transparency. And so I think what we do, you know, there's certain base data that we provide on a regular basis, and certainly we're getting more requests for kind of deeper kind of dive into that data, which we rarely provide. I think we're kind of in the process of figuring out how to kind of in a complete and efficient fashion get the most transparent dissemination of the information, the impact information that we take in and then analyze and can produce for our stakeholders. But it's a process. I mean, I think we're much better than we were 2 or 3 years ago, and I think, you know, if we have this conversation a year or 2 years from now, I think we'll be that much further along.
I'm excited to hear your optimism, Casey, and I certainly think so too. So I'll round this up with one final question, and it's a very timely one given the COVID-19 crisis that we are all grappling with today. Folks would love to hear perhaps how the situation has affected your investments in your portfolio companies, and just any reflections that you would like to share. Any thoughts on that, Jessica?
Sure. We have noticed that our investees is more relevant now ever than before. For example, we have a healthy company called MagnaMed. They provide ventilators for the hospital beds. So in this moment, we are put all our efforts to make sure that they have capacity to provide enough equipment for this situation here in Brazil. So we are thinking this is the moment that the folks could understand better the relevance of the impact business, because they are for the main purpose of this business is really to attend some social issue, and we have a lot of social issues come up in this situation. So we are trying to focus on these companies that are working directly with this pandemic, for example.
Thanks, Jess, and that definitely makes sense. Any final thoughts, Anjani, on that from you?
Well, I'll just add to what Jessica said, is that you know, in India in particular, as you know, we are in a lockdown since last night, and a lot of companies, particularly in these areas of agriculture and financial services and healthcare as well, that work with poor population, this is a time of you know, major concern. Both because their business models require significant feet on the street presence, and if their business models are online, the customers that they serve have a cash flow that requires that is very much dependent on daily or weekly wages. And in this scenario of lockdown, these companies get hit on both those aspects. And we are only now starting to think about what we can do in terms of as broadly as an investor community to create certain mechanisms and put certain mechanisms in place that can allow some of these companies to tide this the circumstances.
Thanks, Anjani, and I think that certainly resonates with our audience here, so I appreciate those remarks. At this point, I would love to pass it back over to Kelly for some concluding remarks.
Thanks, Sophia, and thanks very much to our speakers for sharing their views, for the work that they do to advance the field, and thanks very much to you all for sharing your insights and questions. As the survey results show, and this discussion itself, investors globally feel a sense of tremendous urgency to figure out how to incorporate impact into decision-making to get capital to the greatest need. Figuring this out is now more important than ever, especially to this final question from this group, as the crisis we find ourselves in points clearly to the urgent need for impact investing and impact capital. As we face global challenges that do not respect borders, the discussion today clearly points to the need for more and better impact performance data, insights, and benchmarks to inform capital allocation decisions. And we at the GIIN believe that real-time impact performance information will not only help investors do their job and know whether or not they are doing a good job, we believe it will also help drive a race to the top. That's why over the next 3 years, the GIIN is working to catalyze a market for impact performance tools such as ratings and benchmarks, and we've already begun this work. And I just want to share a couple of points here and call you all to get involved where you see interest. We're convening a global community of institutional investors and asset managers and asset owners, as well as standard setters and industry bodies and service providers and academics, working together to inform the data, metrics, and analytical tools needed to drive results. As the creator and champion of IRIS Plus, the generally accepted system for measuring, managing, and optimizing impact, the GIIN has built the data standard and impact measurement and management system that make comparable impact analytics and benchmarks possible. And working in collaboration with the industry, and many of you, we are defining the methods and contextual factors necessary to assess and benchmark the impact performance of investments. We'll be publishing the second installment of these impact performance studies in the coming months. And finally, we're building on our track record of collecting data from the impact investing community and delivering critical analyses. So we're working to enable simple capture, storage, and retrieval of that data to continue to make impact information more accessible for your investment analyses. So the situation that we find ourselves in now, this pandemic, only makes the needs of our world more pressing and only makes clear the world's need for the work of this community. So we hope you all will join us in these efforts to pave the way for benchmarks and impact analytics to inform investment decisions. So, join us, join the thousands of investors already using IRIS Plus. Join us in delivering impact performance information by participating in the impact performance studies I just mentioned. Join the GIIN members in informing the data needed and uses of that data for your work. And please reach out to find how you can get involved in the myriad ways we're quickly and effectively responding to the coronavirus pandemic, as I mentioned at the top of this call. As those efforts develop, you can count on the GIIN staff working with our members to support the industry's work in this time of need. We all have a role to play. And with that, I just want to thank you all again for joining us today and for your important work.
Thanks, Kelly. And one final ask before we close out. We do have a quick post-webinar survey to gather some quick feedback and reactions to this webinar. It will pop up as soon as the webinar closes, so do please take a look at that and take a minute or two to fill that in. Thank you all so much again for joining. A big thank you to our speakers, and please stay safe and healthy. Take care.
Thank you.
Thank you so much, guys.
Bye.